Yeah, it's of course becoming much more difficult for the sector to return to growth. I think I was expecting to see a recovery of the luxury goods market towards H2 25, so H2 this year, after a tough year 24 because of China being so weak. But of course, right now with all these new macro uncertainties, this will likely be pushed back to a further stage of when we can return to a stronger growth in the luxury space. So of course, you have now two impacts of this whole new tariff news flow. The one is of course clearly how do you implement all these higher tariffs in your P&L and how this flow through, which I think is maybe not that bad. And the second one is, of course, how is the macro evolving following all these new market uncertainties, which I think here has the biggest impact on, consumer sentiment and, of course, demand at the end.
I don't think any of the stocks in the basket have been resilient at all, even the best in breed, which is Hermes. But are we going to see any resilience in the earnings? For instance, the more expensive the goods, the higher it is perceived in consumers' minds, will you see those companies able to protect their margins and pass on higher costs versus those brands that are not as well regarded? I mean, is that going to be a thing in the next number of quarters?
Yes, I would tend to think so. I feel like to me right now with this new environment, you have even more so the high quality names and I guess more resilient one that are going to still outperform compared to the ones which are a bit more vulnerable. So, of course, you mentioned pricing, but the companies can raise pricing. If you want to offset this, new tariff cost, it is just around mid-single digit price increase. So I think it's quite manageable for the luxury goods sector. And of course, some brands can do so much more compared to others. Hermes, I think, can raise pricing. LVMH has some brands that can raise pricing too. But of course, some others, you may be wondering if they have enough pricing power today to do so, especially because you have seen a lot of price increase in the sector already happening in the past couple of years. So it's a bit more difficult. But I feel like, yes, the more resilient one will still be resilient in the quarters to come.
So I'm wondering whether the approach also from the luxury brands is going to be investing more on the so-called flight for quality. This is what consumers want. This is what we should be investing more to deliver upon. What is their strategy here amid the tariffs?
Yeah, it's a good question. Of course, it's very early stage. We don't know what they want to do. So I think, of course, you will have for sure some price increase that you have to deal with. And then, yes, maybe try to offer a bit more, experience, have some higher price value, some higher, I guess, reason to come to the store as a consumer and to still make this purchase, even though it is, of course, a bit more expensive going forward.
So talk to us as well about the outlook for the Chinese consumer here. We know how important it is for the luxury sector. To some extent, that had been put in second place with American buyers being more important for the sector. But, as we're expecting more domestic stimulus in China, is that likely to perhaps bring up or revive a little bit more the consumption in China?
Yeah, that's what I was, I think, expecting up until, of course, this tariff news flow. I just came back from China a few weeks ago, and I felt like there was a slightly better sentiment on the ground. And of course, it was still negative luxury goods growth in Q1, from what I was understanding, but it was getting a bit better compared to the past few quarters. So it was a sequential improvement. And of course, there was hope to be seeing even better trends going toward the rest of the year. It was a really, I think, tough second half of growth last year in China. So you have some easy comp base going towards H2 25. And so you could maybe see a return to small growth by, again, the end of the year. But of course, there was, a few weeks ago, and now with this tariff news flow, I think everything is changing. We are expecting to see China being down 5% on the luxury market this year. But of course, we now see much more downside risk to our estimates on the back of all these new macro uncertainties. The Chinese consumer really wants to feel confident about the market, to be able to consume and spend more, because they right now have a high savings ratio. And of course, when you're seeing what's happening today, it's quite hard for them to just come back and shop more in this environment.